Matt the Mortgage Guy here. I've got a very special guest and a very special video for you today. I often get told that the best way to explain mortgage is so that a sixth grader can understand. So today I have Ryan, my sixth grader, with us. Thanks for coming on, Ryan. Thanks for making the video with us. And basically we're gonna talk mortgage. I'm gonna explain it in a way that even Ryan can understand so that anybody out there, if a sixth grader can understand it, you can understand it. So thanks for coming on, Ryan. I appreciate it, buddy.
Okay.
So you're a sixth grader and I wanna know, what are your questions about mortgage?
Like, what is a home loan? Can you explain what it is?
What a home loan is?
Yeah.
Sure. So, somebody's gonna go out and buy a house and the house costs $400,000. They don't have $400,000 sitting in the bank. Most of my friends don't, okay? And so they're gonna borrow money, and that can be called a home loan, that can be called a mortgage.
And slowly pay it off?
Yeah, exactly. So if you buy that house for $400,000, maybe you put $20,000 down and $380,000 is a loan.
Okay.
And then you've got a 30-year loan to pay that off. Makes sense, right?
Yeah.
That's easy. See, a sixth grader can understand it. What other questions you got, dude?
Like, how do I get a home loan? Like, how if I wanna start paying off the house, like, how do I start?
Yeah, because before you even go out there and buy a house, you want to talk to a mortgage person. So you want to reach out to somebody like Matt the Mortgage Guy or somebody else. There's lots of great mortgage folks out there, and you apply and get pre-approved before you even go out looking at houses, before you even go out shopping. And I can tell you about that home loan process if you want.
Okay, yeah.
You want to hear about that? Okay, so you're a tech savvy dude. People who are young could get on the internet and do stuff online, right?
Yeah.
All right, so probably 90% of the people that come to me, there's an online application. You fill out all your information, your name, your date of birth, your social security number. Make sure it's a secure site. Don't be putting all your information into any old site. But for our purposes, it's a secure site. All your personal information, what your job is, how long you've been there, what the address and who to contact.
Do you have to have make certain amounts and like have certain stuff to apply, or can you just like do anything?
Well, you can apply no matter what, but in order to qualify for a certain size house or certain size loan, you've got to make a certain amount per hour. You've got to be at the job for a certain length of time.
Yeah.
And so the people that are approving those loans, they'll look at it and they'll say, okay, you've had this job for 3 years, you've made exactly this much every month, and you don't have a lot of other debts, you'd be qualified for this much mortgage.
Yeah, so do they have lots of different options? Like, do the people who own the house and are gonna sell it, do they have different options of tons of people, and like they pick the people based on how much they make pretty much?
Yeah, but what happens is if I'm selling a house, I'm not the one who's loaning the money to the people buying it. The bank is going to loan it. So just like you said, the bank can look at all that stuff.
So the bank picks who it is?
Yeah, the bank says, or in my case, it's the different lenders I work with based on all your criteria. Your credit score, which means...
What is your credit score? I've heard that before. I didn't know what it means though.
Okay, so let's say that you've never owned a house, but you got a car loan, you got a student loan, you got a credit card to go buy a computer at Best Buy, stuff like that.
Mm-hmm.
Every time you pay payments on that other debt that you've had, on those other loans you've got, it gets reported to the credit agency. So if you've done a good job...
Is that bad? Like, the more you spend, is that bad or good? Like, if you spend...
Well, you don't want to spend a ton and owe a lot of money to a lot of different people. But if you've opened up 4 or 5 or 6 accounts and you've always paid them on time, then that's a good thing. And so that's what credit score is. Credit score is telling the lender how well you've managed credit. So that's important, dude. When you're 16 or 18, you get credit cards, it's going to be important, always pay them on time. Because if you don't, you're going to have a low credit score. And then when you go to apply for a home loan, it's going to be a lot harder.
Yeah, like, credit card, I'm pretty sure I know how credit cards work. Like,
tell me what you think.
Like, you can buy, I don't know if you buy, do you buy credit cards? Like, do you buy them and like, you can add money to them and you can spend it wherever you want to? Well,
there's some that are like that are prepaid cards. But most credit cards, they just say, here's a credit card with a $500 limit, and you can go out and spend.
But you can't add anything? Like, if you want to add money to the credit card or no?
Not usually. Usually they let you spend, and then let's say you spend $200, you get a bill in the mail that says, hey, you owe us $200.
Oh, you owe the people who gave you the credit card
right.
money as you spend it.
And they charge you interest, and then they say, you got to pay us at least $25. You can pay the whole $200 off, but pay us at least $25. And you pay them $25, and you owe not only 175, but the interest too, so you owe them 177. And the next month you pay them whatever, they add a little bit of interest.
So they're basically like profiting.
Yeah, they're making money on the interest.
Yeah.
Yeah.
So what were you talking about before you talked to me about credit cards? Like about credit?
Oh, just paying all your stuff on time so that you have a high credit score. Because not only will it determine whether you get a loan or you don't get a loan, if you have a high credit score versus a low credit score, but it also is going to determine what
Like
type of loan you get. And I'm going to give you, if you have really good credit, I'm going to give you a really good loan.
yeah, like if you can get like a more expensive one, kind of.
Yeah, more expensive, but then also I'll give you a lower interest rate. Not me personally, but the lender you're applying with will give you a better interest rate.
Interest rate is like how much you put down, right?
Interest rate is
Or like how much you pay each time.
right. And let's say you borrow $100,000 and the bank's going to charge you 3% interest. That means that 3% of 100,000 is 3,000
So then you pay $3,000 every month,
every year.
every year.
So it's about $250 per month. Now let's say you have bad credit.
It's gonna take a long time. Like a long, long time.
Well, yeah, a little bit goes off of the 100,000, a little bit gets paid in interest, so
Are you
slowly.
allowed to pay more than like? Are you allowed to pay more each month if you want to pay it off faster?
That's an amazing question, dude. Yeah, you can pay extra payments. I've got a YouTube video on making extra principal payments to pay it off sooner. That was a good one. I like that. What other questions you got? Got a lot of good questions, man. I like that. The credit score and the extra principal payments and all that.
Yeah, like so, like you're a broker, right?
Mhm.
And like, what are the different types of like like people that have to do with buying a house? Like, what are the different people? Like, what do they do?
That's a good question. So usually it's going to be you find a mortgage broker and I can help you get pre-approved for the loan. So
Mhm.
now you know, hey, I can buy a house up to 400,000. After we've talked and you've got pre-approved, now you go connect with a realtor, and the realtor is the one that shows you the houses, helps you find the house,
What is Doug?
helps you put an offer. He's a realtor. Yeah. And so he helps you find the house. Once you find it, then I help you get the loan. And then during that whole process, there's a title company, there's an appraiser, there's a bunch of other folks. But realtor and mortgage loan officer, broker, whatever you want to call them, are the important pieces.
Are those the only people have to do for mortgage, or is there other ones too?
Yeah, I mean, there's other people involved in the process, right? Like when I send it to a lender and they approve the loan and they're involved and they've got an underwriter, they've got all those people. But really for your purposes and for the purpose of people getting a loan, you just communicate with the mortgage broker and whoever's on that person's team helping you get pre-approved and stuff.
Okay.
Cool. What other stuff you thinking about? You thinking about your first house at 18 or 19 years old?
If I can, like, if I can, like, if I have the money to.
Yeah. I mean, maybe you won't want to, but
Are you still gonna like be working as a broker by that time or no?
yeah, it's only 7 years away, man. I'm going to be working as a broker for the next probably 15 or 20 years before I retire and ride off in the sunset.
Don't you get stuff for you retired? Like you get like a retirement, like not fee, like a plan or something?
Yeah, different people have retirement plans where they've paid into it for years or years, depending on who you work for. Since I work for myself, I've got to set up all my retirement on my own. You know, invest money in different places where.
Yeah,
Yep.
like, you probably don't you have like a retirement bank account?
Yeah, saving money in stocks and in cash, and then 401k.
Oh yeah, stocks. That's something I don't know that much about. Like,
Well, it's like you got Under Armour clothes. If you want to invest in the company Under Armour, you could.
don't you buy stocks and like when they sell, if they like are doing good, then you profit. But it's kind of like a luck. If they aren't doing good, then like you kind of pay them more money than they pay you.
Yeah, well, but if you bought stocks of Under Armour, I have no idea what Under Armour's at because I don't know any Under Armour stock, but let's say it's $40 a share. If they keep growing and getting bigger and the company keeps doing better, maybe it's $60 a share. So if you bought 10 shares for $400 and then the shares went up to $60 a share and now it's worth
So
$600.
you kind of profit it.
Yeah, it's kind of like a mini stake in the company.
Yeah, but don't they give you like a percentage of what they make?
Some of them will pay dividends, which is like a little bit like that, like a percentage of what they make. But a lot of times it's just they've got a stock price, and over time that either goes up or goes down based on how the company's doing.
Okay.
Yeah. You want to buy some Tesla stock? It's like $580 a share.
But is it like?
Their company's been crushing, doing really good. All right. Was that informative? Did you learn some stuff about home loans and some
Yeah.
other stuff?
Yeah.
All right, cool. Maybe we'll revisit next year and we'll do home loan talk with the seventh grader.
Yeah.
All right, cool. Thanks for coming on, dude. Awesome.